when the market sentiment was arguably the worst it's ever been. Just a little bit over a week ago, I made a bold prediction, but an accurate one. This was the very unpopular opinion, but if you had just listened to me, you would have made a killing. And this right here is the proof. The Bitcoin video I hoped I'd never have to make, made about 7 days ago. This is what the thumbnail looks like if I hover over it. So if you click the video and you come down here, you can see that, right? The Bitcoin video I hoped I'd never have to make. November 21st, 2025 is when I dropped the video. As you know, that was a very significant day for crypto in its history. And you can tell I'm on the 21st minute and 27th second of the video. And I'm talking about the interest rates, right? The Fed meeting. Now I'm going to play back the video for you and just listen to what I had to say when the sentiment was at its worst just a week ago. ME Group, Fed watch tool, that this is just predicting whether or not we get a Fed rate cut. And this is set on December 10th, of course. Right now, people don't think we're going to get a rate cut, which doesn't make sense to me because I'm going to get into some of the unemployment numbers that we're seeing across the board for a lot of these larger companies. And companies are laying off right now. Companies are not borrowing money to grow their companies or to hire right now because it's too expensive to borrow debt. And that's one of the reasons why I also believe that we're going to have to lower interest rates. It only makes sense. Now, much of that sentiment has quickly left because the CME Group, the Fed watch tool, is showing us now that there's an 86% chance for a 25 basis point rate cut. Now, this was not the sentiment just a little bit over a week ago. I told you that this was going to happen. You should have just listened to me. You would have made a killing. Now, the next Fed meeting is coming up on December 10th, as I showed you in that clip. In my community knows by this point that the more times than not that you listen, I'm not always right, but the more times than not that you listen to me, good things usually happen for you in terms of buying altcoins early and things like that as well. But this is just something else that I knew had to take place because of the macro environment that we're in. And we're going to get into all of that later in this video. So I just want to go through the charts a little bit because there was a reason why I felt this way last week. And it wasn't just off of a whim or a feeling. There's things that I saw in the chart that led me to believe that we are at a bottom and that we would have to get a Fed rate cut due to some other factors that I'm going to get into later in the video. But if you can tell down here, I have the RSI, the relative strength index, and below the 25 point and above the 75 point usually showed pretty decent times of when we either top or have intra-week tops or intra-month tops or intra-year tops in the cycle. And the same thing is true when we get to the bottom of these cycles. So you can see it dipped right below the 25 point mark here. And if you hover over this wick, you see this wick right here? That was November 21st, the day I dropped that video. And if you look downward on my screen, let me just get the date back up. You can tell, you see, November 21st, 2025. That was literally the bottom. Now, throughout the cycle, this has been a pretty good line of support, and we've always bounced off the 50-week moving average. We actually came down to the 100-week moving average, and this is where we actually found our support and our line in the sand. And this is something that I did say was possible because I ended up drawing a pretty much a volume box because we had a bunch of previous volume down here as support and a bunch of volume up here as well. You can see that line there, but between roughly $74,000 and $89,000. And we actually used this entire area of support. Now we'll see if it holds because currently it's still trading. Currently the 100-week is still trading at $83.4 thousand. Do I see us getting down to 200-week? I'll be honest with you. If we get down to 200-week, the bear market is probably solidified. We're probably at the bottom of the bear market because this has been the strongest area of support in the markets, period. When we hit this line or go under it, we're usually in a bear market. But luckily, we got that bounce off that 83.4K level, and we'll see where we trend within the next couple weeks to months. But it's my belief that when quantitative tightening ends, we're going to probably get a form of quantitative easing, and this is happening globally. And the first step to that, as far as in America, North America, is getting interest rates lower, and I think that's going to happen on December 10th. As I said, when the sentiment was absolutely its worst it's ever been in a really long time. Now, a few more things that I want to just get into quickly before we go too much further into this video. And I want to show you where the crypto fear and greed index was on that date. Now, I can't get the exact date here, but close around that date, I think we hit 11. I just can't get my cursor to go low enough, but we on that same day, November 21st, 2025, we actually hit 11 on the fear and greed index. If you go back to any other cataclysms, we were around that point on the fear and greed index. So we had extreme fear last week, and we are in completely different macro environments than we were in these previous times. As you can see, I have it pulled up here. June 2022, that was the first large dip and the beginning of the bear market in 2022. And then we also had that lower low in December, like Q4 end of that year. If you go back to the cough season, right, we hit a 8 on the fear and greed index. That was extreme massive fear. So we're having bear market lows of fear, but a lot of things macro aren't really lining up to say that any of these things are justified. Now, I know this had a lot to do with the liquidation events that we had in October and the few weeks that followed after, with all of these selling, the sell pressure from all the longs getting liquidated and things like that. But you have to keep this in the front of your mind to some degree. We have a positive political party that is pro crypto. We have interest rate cuts coming. We have a new Fed chair coming into the fold in 2026 as well. And I'm going to touch on a little bit of that right now. So who is Kevin Hassett? Coinbase's advisor could replace Jerome Powell as Fed chair. Now, there's just a few key takeaways from this as well. Kevin Hassett is a contender to replace Jerome Powell as Federal Reserve Chairman. Hassett previously worked as an advisor for Coinbase, which is huge for the base chain and Coinbase. I believe he also holds some assets in Coinbase stock. Oh, as it says right here as well, $1 to $5 million worth of Coinbase stock. So this is very bullish for Brian Armstrong and the base ecosystem. Personally, my favorite chain. And if you're on this channel long enough, you know I've been talking about this for a long time and why I feel Coinbase is going to be the strongest chain going into 2026, because you have all the money coming in from Coinbase, that is a publicly traded stock company at this point, and the money's going to flow into Coinbase Exchange. You already have a bunch of custody from all of the ETFs housing their Bitcoin on Coinbase, and then you have the money from the Coinbase Exchange coming to the base chain. And they also released this wallet functionality where they buy coins in the background, and now regular investors that are on the Coinbase centralized app can buy a lot of things you were only able to buy previously on the DeFi side of the base chain. But I'll leave a video or a card somewhere in the screen you can click to watch that video after. Trump on power replacement. I already know my choice, and everyone's speculating that it's going to be Kevin Hassett. He's going to be bullish. He's going to cut rates. He's going to do exactly what Donald Trump wants him to do. And every president eventually has gotten their way in terms of monetary policy. And he just wants to make himself look good and make the stock market look good and make crypto look good, and just wants to see the economy grow. So you know that the money printer is going to come back on, and we're looking like we're seeing the first of that coming December 10th. This is going to be one of the biggest days for crypto going forward. And I think a lot of people got shaken out because they are still stuck on the 4-year cycle theory, when in reality, it had nothing to do with the 4-year cycle. I used to once believe that as well, but it more so has to deal with the liquidity cycle, the business cycle, which I also talk about in a lot of my videos. Now, this is just a quick piece of information, just to each his own, okay? Bitcoin exchange reserves, all the exchanges that hold Bitcoin fell off of a cliff on the 24th. I think it was 21st, yes, 21st to 24th of November. And that was also last week. And I keep bringing up that date for a reason, because I told you a lot of this stuff was going to happen. Now, this date is significant now and is cemented in history, because this is a time period where a lot of people ended up selling. Now, something interesting that happened was a lot of people took their BTC off of exchanges, and they're probably putting it into cold custody because they're starting to hold for the long term. So this also almost signals to me that they know something that we don't. Now, mind you, these are mostly whales that drive a lot of this, because a lot of the BTC holders that had less than 0.1 BTC actually ended up selling a lot of their Bitcoin on this cataclysmic event, versus a lot of the bigger whales bought up a lot on exchanges and then just took a lot of their BTC off of exchanges, which you can see in the price here as well. And this has actually never happened before. You can see on the chart here, we've usually had a gradual downturns, but another thing I want to point out is that when you see a lot of BTC leave centralized exchanges in droves, you can see this big downturn here. When a lot of BTC left exchanges, you also saw the price in the black go up around the same time. And people are speculating whether this is going to happen now, right? This entire run-up was fueled by a lot of people taking BTC off of exchanges, as you can see here. So in my opinion, it looks like BTC is about to rip and have a really big rally again. We're hitting a lot of bottoms on a lot of technical indicators that suggest that we could get a really nice rally coming into 2026. But like I said, we'll just have to wait and see. But my money is on Bitcoin and crypto assets doing well next year, because this business cycle has been stretched out a whole extra year. We should have had rate cuts way low. We should have rates way lower by now. So I only expect them to aggressively have to cut once we get that unemployment data, and especially in 2026, once we get that new the Fed Reserve chair. I think we're gonna. I think a lot of people are gonna be left on the sidelines, and they're gonna feel max pain to the upside, versus in a bear market when you usually feel max pain to the downside. And this is a post by AO BTC analyst. I've never heard of this guy before, but he made a pretty good post. He said every time the stochastic RSI on the U.S. 10-year, I think they're talking about the Treasury there, and the Chinese 10-year made a bullish crossover, a Bitcoin bull run followed, and it just made a bullish crossover again. And you can see here. Let me click onto the chart he has here. And you can see that it's crossing over, as you can see down here. I believe this is in November as well. And we've always had a bull market, and a violent one at that. And that would just line up to everything that I've been saying with interest rate cuts and them pumping liquidity into the market and them having to pay back their debts, because a lot of the bonds are maturing this year, right? The Fed bought a bunch of bonds in a bunch of different countries and central banks around the globe, and financial institutions have been buying bonds, and a lot of those things are maturing in 2025, meaning that the government has to pay back all of these people, right, from the money that they borrowed from them. And the only way the government can do that is if they print money. So this just pretty much means more liquidity in the system. And because we're in a risk asset class or risk on asset class like crypto, it follows liquidity very closely. So if more liquidity is coming into the market, and the growth of liquidity is going up over year, then just expect crypto and Bitcoin to pretty much do the same thing. So U.S. credit card capacity is expanding at a record pace. Total credit cards limits reached a record 5.3 trillion in Q3 of 2025. God knows how high they are now. And this is data according to the New York Fed, right? At the same time, outstanding credit balances rose over 67 billion year over year to 1.2 trillion, an all-time high. Now, obviously, this does mean that people are having trouble paying back their debts. So they're going to need lower interest rates if they don't want to have a ton of defaults as well. But the quick touch on the top point as well, the fact that credit card limits are going up just means that the banks now are trying to incentivize us to spend more money, right? They're giving us more money to inject into liquidity so they can start to jumpstart the economy again, after all of this long, drawn-out quantitative tightening that we've had for the past like 3 to 4 years at this point. This leaves a record 4.1 trillion in available unused credit, which will absolutely get gobbled up in no time. Credit limits have surged 1.5 trillion since 2020, far outpacing the 430 billion increase in credit debt over the same period. This comes as the banks are aggressively raising credit limits and offering cashback and rewards programs to encourage more card usage. The credit card debt crisis is expanding, and you can see this little graph here just details out the credit limit versus the credit balances. Now, not to say that these things were ever like closely correlated, but as you can see, as credit limits went up, you did have a slight spike in the amount of credit usage. And I think if interest rates go down, I think you'll see this obviously spike. And we've trended upwards since 2003 up until now. So just expect this credit card balances, the credit usage, to continue to go up as well. Now, looking at one of my favorite charts, if you don't know, this is the US dollar index, the DXY, the Dixie as they call it, and it pretty much details out exactly when we're ever in a altcoin season. I know that's a word that's like shunned upon now, but I'm still going to say it because a lot of people didn't believe we're going to get interest rate cuts. I still believe we're going to get an altcoin season at some point next year. Might be end of next year at this point, because it's still taking a while to get all this money injected into liquidity. But regardless, 6 to 12 months from now, I think we're going to be at a much, much higher price for Bitcoin and crypto assets. So anyways, let's get into the DXY and how this correlates to your Bitcoin prices. As you can see here, I'm going to compare this to the BTC chart. Whenever we have spikes in the DXY, that means that the dollar is strong. The US dollar is strong. What have we heard Trump say about the dollar from the past like year, right? He wants a weak dollar. The reason why he wants a weak dollar is because people can then go out and borrow money, pretty much borrow money and spend money. And it's a lot cheaper for them to go out there and borrow money if we have a weak dollar, right? Interest rates are usually lower by this point when we have a weak dollar. So down here, interest rates are usually lower. And something else is usually a lot higher around this time as well. If we go back to the previous market cycle in 2021, just to detail out these dates here, you can see up here, this is November 2021, and this is around April 2021. And if we go to the DXY, look at it right over here, right? This was around the same time, around April 2021, that first real blow off top when we had the inverse correlation with the dollar index and the Bitcoin price. If we go back to 2018, you can see down here as well that when we go back to the 2017 bull market, right? If we just open up the chart here, you can see that when Bitcoin and crypto assets were peaking over here in December 18th, 2017, you can go to the DXY and they were doing the same thing around this time. So a weak dollar is good for crypto assets and risk assets. We don't want to see a strong dollar. Now, we're currently battling with support at this 100 level, right? And I do think it's going to end up rolling over because, like I said, the one catalyst that we haven't had yet is quantitative tightening ending and interest rates being lowered, right? So once that happens, I definitely see the dollar starting to roll over, and I'd be looking for it to reach levels of around 93 to 92 for where we really could start to see a full-blown altcoin season. Now, something that's detailed out in altcoin season even better than the DXY is the ISM. Now, this has to do everything with the business cycle and when the business cycle expands. This is the ISM, the PMI, and it's a very easy chart to follow as well, so just follow along here. I'm going to do the same thing. Remember when we talked about the Bitcoin price, right? And this was end of 2017. You can see right around this time, we spiked above 57.7 on the ISM. Every time we've crossed above the 50 point on the ISM has usually signaled assets, going into some form of an altcoin season. And the same is inversely true. Around cough season, we hit a 41.7, right, on the ISM. So the ISM hasn't even expanded yet from the last cycle because we've been in a tightening cycle. As you can see here, if we go back to 2021, when we had that first blow off top, the ISM was actually leading the blow off top in Bitcoin around February. We had that blow off top in Bitcoin in April, right? And we've only seen a downward trend and a bit of consolidation on the ISM since that point. We haven't had a massive spike or an expansion in the business cycle. You can also see this in 2017 as well. When we spiked at the end of 2017, when we had that top in the Bitcoin price, you can see we touched around the 60 level, and we had a big drawdown as we got into a bear market. So we've only had a downward move on the ISM, and we haven't actually started to expand yet. And you can actually see the point from when we hit the both peaks in the Bitcoin price, that we've actually had a lot longer drawn out point to where we are going to get our next peak in the ISM. So once this crosses 50, I start to look to sell a bit of my bags when we get across the 55 point level, because if you go back all time, we've usually had the peaks in most cycles and business cycles around the 55 to 60 point level. But realistically, you don't want to get caught with your pants down. So when we get up to the 55 point level, I'll be definitely considering selling a big portion of my bags, just depending on what a few other metrics are saying as well. When that point comes, you definitely want to be subscribed to the channel and leave a comment down below if you have any questions or have any thoughts about what's going on in the market right now. Like the video. I love you guys, and I'll see you in the next one.